Something is happening right now in the financial markets, and almost nobody's talking about it the right way. Wealth is being created fast, quietly, and the people creating it aren't the ones you'd expect. They're not hedge fund managers, they're not Wall Street insiders, they're everyday investors. Some of them probably a lot like you, who understood one specific shift happening in the global economy right now. And because they understood it, they positioned themselves early, and they are winning. But here's the part that should wake you up. For every one person getting richer right now, there are 10 people sitting on the sidelines, confused, maybe even scared, watching their purchasing power erode and wondering why nothing seems to be working for them anymore. The gap between those two groups is not luck. It is not connections. It is not starting capital. It is one thing: understanding why this wealth cycle is happening. Today, I'm going to walk you through exactly what is driving this quiet wealth creation, why most people are completely missing it, and most importantly, what you can do right now to make sure you are on the right side of this. Make sure you stay until the end. And if this is the kind of content that actually helps you think clearly about your money, leave a like right now. It genuinely helps. Let's get into it. Let's start with a question that seems simple, but is actually profound. Why do some people get richer during uncertainty while most people get poorer? It doesn't seem fair, and honestly, on the surface, it isn't. But once you understand the mechanics, once you see what's actually driving wealth creation right now, it starts to make complete sense. And more importantly, it becomes actionable for you. Here's what's happening at the macro level. We are living through one of the most significant capital rotation cycles in the last 2 decades. Money, trillions of dollars of it, is moving. It's leaving certain assets, certain geographies, certain sectors, and it is flowing fast into a very specific set of places. And the reason most people are missing it is because this rotation doesn't look like the last one. It doesn't feel like 2009. It doesn't feel like 2020. So people are waiting for a signal that looks familiar. And while they wait, the rotation is already underway. Think of it this way. Imagine a river that suddenly changes course. The towns that understood the geography moved with the water. They built their infrastructure around where the river was going. The towns that didn't understand the shift, they kept building around where the river used to be. And slowly, quietly, they dried up. That is what is happening to wealth right now. And the scary part is, the people losing ground aren't doing anything obviously wrong. They're saving. They're being careful. They're doing what they were taught to do. But the rules of wealth creation have shifted underneath them, and most people haven't been told. Now, let's break down exactly what is driving these things. Because once you see these 3 forces clearly, you're going to understand why certain people are pulling ahead, and you're going to see the opportunity that is sitting right in front of you. So let's start breaking down this dynamic. Because once you see these 3 forces clearly, you're going to understand why certain people are pulling ahead, and you're going to see the opportunity that is sitting right in front of you. Force number 1, the great cash trap. Here's something most people don't want to hear. If your money is sitting in cash or in a traditional savings account right now, you are not playing it safe. You are slowly losing. Real interest rates, that's the rate after you account for inflation, are still negative or barely positive in many parts of the world. What that means in plain English is this: the purchasing power of your cash is being quietly eroded every single month. And the insidious part is, it doesn't feel like a loss. Your account balance doesn't go down, but what that money can actually buy, that goes down. Your rent, your groceries, your healthcare, your kids' education, all of it costs more. That's the cash trap. Now, look at this chart right here, and this is the key chart to understand today. When real rates are near zero or negative historically, what happens? Capital floods into productive assets, into equities, into real assets, into businesses, into commodities, into anything that produces a real return. That is what's happening right now. And the people who understood this early, they moved their cash into assets, and those assets are appreciating. The people who didn't, they're watching from the sidelines, wondering why prices keep going up, but they don't feel any richer. Force number 2, the AI and productivity premium. We believe this is the most underappreciated driver of wealth creation in 2025 and 2026. Here's what 99% of investors are completely missing. AI is not just a tech story, it is a productivity story. And productivity gains throughout all of economic history are one of the single greatest drivers of corporate earnings and therefore stock market wealth. Think about what happened during the Industrial Revolution. Mechanization didn't just create a few rich factory owners, it created an entire new middle class. Wealth cascaded through the economy. Unevenly, yes, but broadly. We are in the early innings of something similar. And right now, right at this moment, the companies that are embedding AI into their operations are beginning to show margin expansion. They're doing more with less. Their earnings are growing faster than their costs. That differential, cost growth slower than revenue growth, that is the engine of stock price appreciation. And the investors positioned in those companies, in those sectors, are capturing enormous gains. But here's the thing. Most people are looking at AI as a headline, as a buzzword. They see the hype and they think, bubble. They step back, they wait. And while they wait, the fundamentals are building underneath the hype. And that's when real wealth is created. Not when something is obvious, when it's early. Force number 3, the debt-driven divergence. This is the one that genuinely concerns us the most because it has the most dangerous and visible effects. Global sovereign debt is at historic highs. The United States, Japan, Europe, almost every major economy is running deficits that would have been considered crisis level just 20 years ago. Now, here's what most people think when they hear that. They think crash, collapse, doom. And that thinking is actually what's keeping them poor. Because here's what actually happens historically when sovereign debt reaches these levels. Governments do not suddenly cut spending and go austere. They inflate, they monetize, they keep rates lower than they should be for longer than they should. And in that environment, hard assets, equities, and productive businesses dramatically outperform cash and bonds. The people who understand this are buying those assets. The people who don't understand this are hoarding cash waiting for a safe moment that never quite arrives. This is the divergence. This is why the wealth gap is widening. Not because the rich are cheating, but because they understand the monetary environment they're operating in. Okay, now here's where this video shifts, because I don't want you to walk away from this feeling defeated or overwhelmed. I want you to walk away with clarity and a plan. The good news, and there is genuinely good news here, is that this wealth creation cycle is not over. You have not missed it. We believe we are still in the early to middle stages of this capital rotation, which means the window to position yourself is open, but it will not stay open indefinitely. These cycles do not wait. So what are the specific moves that actually make sense right now? Number 1, audit your cash position. Not to panic, but to ask what percentage of your net worth is sitting in low or negative real return assets. Any cash beyond your emergency fund is working against you in this environment. Number 2, lean into the productivity theme. This doesn't mean blindly buying every AI stock at any price. It means building exposure to companies that are demonstrably benefiting from AI productivity gains. Look at margins, look at earnings trajectory, look at free cash flow. Number 3, consider real assets. Historically, in high debt, moderate inflation environments, real estate, commodities, and inflation-protected assets have significantly outperformed. This is not advice for your specific situation, but it is a pattern worth understanding. Number 4, look globally. The wealth rotation is not just happening in the US. We believe there are massive opportunities in specific emerging markets and undervalued developed markets that 99% of Western investors are completely missing right now. We break all of these down in detail in the free resource linked in the description below. If you're serious about positioning yourself correctly in this environment, I strongly suggest you check it out. Number 5, invest in your financial education. And I mean that beyond watching videos like this one. The investors who consistently come out ahead are the ones who deeply understand why things are happening, not just what to buy. Because when you understand the why, you don't panic. You don't sell at the bottom. You stay the course and you compound. Let me bring this all together for you. Right now, wealth is being created quietly, rapidly, and largely out of view for most people. It's being driven by the cash trap, by the AI productivity premium, and by the debt-driven monetary environment that rewards assets over savings. Most people are not prepared because they're waiting for a signal that looks like the past. But this cycle looks different. It feels different. And that's exactly why 99% of investors are missing it. But you don't have to be in that 99%. The investors who come out ahead of these cycles are never the smartest people in the room. They're the ones most prepared. They're the ones who took the time to understand what's actually happening and then took calm, deliberate action while everyone else was frozen. That is what today was about. And now you have that understanding. So here's what I want you to do right now. First, leave a like on this video. It tells the algorithm this kind of analysis matters, and it helps more people find it. Second, subscribe if you haven't already. We cover macroeconomics, market cycles, and wealth building strategy every single week. This is exactly the kind of content that can can genuinely change how you think about your money. Third, drop a comment below. Tell me, which of those three forces surprised you the most? I read every comment and it genuinely shapes the content I create for you. And finally, check the link in the description. There's a free resource where we go much deeper on the specific opportunities we see in this rotation, with the data and the positioning detailed